Hi, and welcome to Crypto for Advisors, a podcast by Synergist. My name is Andrew McPhee, and I started Synergist in 2017 to help businesses transform around their clients. Today, Synergist is focused on helping Australian advisors bridge the crypto service gap, and that is the focus of this podcast, Crypto for Advisors. It would mean the world to me if you would subscribe to the show on your favourite platform, watch episodes on YouTube, and tell your friends and clients about this podcast. More than a third of Australians are into crypto, yet nearly 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So let's get into today's episode. Let's start with the number one question that I get asked by prospective investors in cryptocurrency who are not quite sold. And that is, how do we know that it won't just go to zero? Couldn't this all just blow up overnight and be worth nothing? Well, it's a good question. So if I think about that, the first thing I would start with is by saying, what's the measure of value? How can we judge whether something has got value? So in my experience, looking at the number of consumers that are adopting or using that product or service is one of the best indications, because that will decide whether there's value or not. If people are using it, then there's value there. So looking at how many people are using the product or service, what that rate of growth is, should tell you a lot about how much value exists. So there's about 8 billion people globally. Out of that 8 billion people, as of March 2024, there was 562 million who owned cryptocurrencies. So that's about 6.8% of the world's population, including children, who own crypto. And that was growing at around about 30% per annum. So it'd be well north of 600 million today. What about a bit closer to home? How about in Australia? Recent studies in Australia have shown that there's 34% of Australians are into crypto. What do I mean by into crypto? Well, that they either own crypto today or they've stated that they plan on investing in crypto in the next 12 months. And how much is this growing? Well, in the Oceania region, where Australia exists, this grew at 114%, so it more than doubled in the last 12 months. Now, in Australia, it's not more than doubling because it's already quite high, but it is growing rapidly. So why? Why is this growing? Where's this growth coming from? Well, in a global context, a lot of the utility of Bitcoin in particular, but other cryptocurrencies, is that it is a decentralized application, which means instead of having a financial transaction go through a central institution or body, it's instead decentralized. Now, the benefit of that means that it is a trustless system. You don't need to trust your bank, for example, or your government that they're going to manage your wealth and they're going to conduct your transaction in the way that you want. We're fortunate in Australia because we do have banks, financial institutions, and governments that we do trust. We're not concerned that our funds are going to disappear overnight or that our payments might get blocked, but in many countries that's not the case. So that's one of the reasons why Bitcoin in particular has been surging in popularity over the recent years. A bit closer to home, I believe that the main driver of value is Bitcoin as a store of value and as an investment. When we compare Bitcoin to other investment classes like cash or global equities, real estate investment trusts, then Bitcoin has outperformed all of the other asset classes 9 out of the last 12 years. Now, yes, it's a volatile asset class, and the 3 years that it underperformed, it came last, but it then bounced back. And any 2-year period, that if you had held Bitcoin for any 2-year period, you would have been pretty happy. If you had held it for any 3-year period, you'd be very happy. And it's not just retail investors who are driving this adoption and growth. In fact, the world's biggest fund manager, BlackRock, who run about 11.5 trillion US dollars in assets, last year changed their recommendations for balanced portfolios that they should be holding between 1% and 2% of Bitcoin. This is the same level of recommendation that they applied to the Magnificent Seven on the US stock exchange. If we look at the market capitalization of Bitcoin, because this is another measure of value, Bitcoin's market cap is sitting at around $3.3 trillion. Again, to put it into context from an Australian perspective, our biggest listed equity is CBA, Commonwealth Bank. Bitcoin is about 11 times larger than CBA. If you look at all listed companies on the Australian Stock Exchange, Bitcoin is larger than the combined market capitalization of all of them. A key driver of growth for Bitcoin in 2024 was the release of exchange-traded funds. BlackRock's previous largest exchange-traded fund was their 20-year-old gold fund, and that has $33.2 billion of funds under management, which had accumulated over 20 years. 6 months after the Bitcoin ETF was released by BlackRock, it had almost doubled the gold exchange-traded fund and is sitting at about $58 billion of flows. An incredible growth story and a major impact on the market. So these are some pretty impressive numbers, and it makes sense that retail investors are flocking towards cryptocurrencies. However, the advice industry in Australia hasn't adapted to this yet. You've got about 67% in a recent study of crypto holders saying they wanted some form of advice. Another recent study showed that about 15% of advised investors who don't currently hold crypto are interested in it. And yet, nearly 90% of Australian advisors won't discuss crypto with their clients. This has created a service gap, forcing many of these retail investors to go it alone. And in doing that, they're exposing themselves to risks that they don't understand or may not even be aware of. Crypto does have a different risk profile to traditional asset classes. Many of the risks are shared, but their profile is quite different, in most cases much higher. Let's look at some of those key ones. For example, volatility. Macroeconomic factors will have an impact on all asset classes, but for Bitcoin and for other cryptocurrencies, that impact is magnified in both directions. Crypto is still in its early innovation stages, and as such, it's moving, adapting, evolving very, very rapidly in the market. So it's no surprise that regulators are having trouble to keep up with it and work out how to manage it. We're seeing some major advances in that at the moment in the early stages of 2025 in the US market, with Trump's setting up a working group under David Sachs to provide some regulatory clarity and decide on things like potential strategic Bitcoin reserve. In 180 days from when it was established, they're promised to come back with that clarity, and the market is expecting that they're going to come back with some very pro-Bitcoin, pro-crypto policies. In Australia, ASIC are taking a bit more time and have been engaging in different discussions with industry bodies to talk about what possible pathways they could undertake. They're currently undergoing an engagement around looking at a digital asset license, but at this stage, that doesn't exist. However, consumers have been investing in cryptocurrency for many years, and there are well-established norms on how to treat that from a tax point of view, for example. Security is a major concern in crypto. And as I record this, it's only a couple of days after the world's largest crypto hack, and that was $1.4 billion US dollars was stolen from a crypto exchange Bybit through hacking their internal systems and bypassing a simple internal wallet transfer. So security is a major concern. I hear it all the time around people losing their keys, losing their hard wallets, or being hacked. And so the risks are very real, and they do need to be carefully managed to mitigate it. And then there's a variety of other risks, which I can go into at other times, such as liquidity, counterparty, market manipulation, legal and tax. So it's for these reasons that Synergist is focusing on bridging that crypto service gap. We strongly believe that retail investors should make informed decisions about whether crypto investing is right for them, and if so, the best pathway to do it. And you do need to understand these risks and make decisions on the best way for you to manage or mitigate those risks in order to be able to do this successfully. I personally stayed out of investing in crypto for many years because I knew there were risks that existed and I didn't really understand them, and I didn't have time to educate myself about it. So I did the logical thing and didn't invest. However, it got to a tipping point where I said, I need to learn about this. I need to prioritize that time. And when I started down that pathway, I found it hard to find voices that I trusted, voices that were independent and not linked to selling an expensive subscription service or a particular exchange or product or service. So this was the first principle for a Synergist when we set out to build our proposition, that we wanted to maintain independence because that inspires trust. What that means is that we constantly review the market for the best offerings and connect investors to the ones that best suit their needs. Our second principle is education enables action. And that's why we're running this podcast to help educate advisors and their clients. We also run a series of other meetups, face-to-face and online webinars and other courses to help educate consumers and advisors so that they're better informed to decide whether crypto investing is right for them, and if so, the best pathway. Our third principle is that innovation complements timeless principles. Although crypto is a new asset class and growing very dynamically, the proven investment philosophies still exist, such as, if you don't understand it, don't invest in it, or dollar cost averaging, or having a documented investment strategy that clearly outlines what your risk appetites are, what your time frame is, for example. And finally, we believe that expertise can be delegated in the same way that a financial advisor might delegate to a finance broker to look at refinancing their clients' mortgages, or to refer to an insurance expert in order to help manage a risk profile for their client. In the same way, we believe that crypto should be referred to experts who do understand the asset class and can provide appropriate information, education to help clients make informed decisions. We regularly run crypto investing essential webinars and face-to-face meetups where we explore things such as not all cryptocurrencies are the same. So what's the difference between, for example, layer one tokens such as Bitcoin, Ethereum, and Solana, the ones that you've probably heard, versus other leading narratives that are in the market, such as AI or decentralized finance or real-world assets or GameFi or even meme coins. After the education sessions, for most people, that gives them enough information to decide whether crypto investing is right for them and the best pathway to do it. But for some, they need a little bit more information or have a bit more complex situations. And for those, we do offer a one-on-one guidance sessions where you can schedule a complimentary 15-minute conversation with a consultant from Synergist, and we can help provide you with information or education to make up your own decision about what is right for you. For any clients that we refer, we then ensure that they've been onboarded successfully with the service that they've been referred to. And then importantly, we check back 3 to 6 months later to make sure that it's actually fitting their needs. And this is an important feedback loop for us to ensure that any service that we recommend, that it is of the best possible quality. So if you find this interesting and you believe that crypto investing is something that's going to be increasingly important to you personally or to your clients, then please do subscribe to this podcast and follow us on our socials, as we regularly will be posting interesting interviews with industry experts so that you can build your understanding of what's happening in the market and educate yourself about this important emerging asset class. If you would like to explore this further, please feel free to scan this code here and set up a conversation with me. I'd love to discuss crypto investing with you and hope to meet you soon. This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.